Good morning, traders. It's 8:02 a.m. Chicago time on Wednesday, the 17th of January, 2018. Thanks for joining me again for yet another session of reading it, planning it, executing it, and managing it. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Overall, great day yesterday of selling, finally. Not that I'm biased, it's just nice to see a market actually rotate. This morning, the indices are higher. We're trading against overnight highs. The S&P is at 2793 or so. The lead today is by RBOB, your friendly gas station prices, up 0.55%. Followed by the Dow, the NASDAQ, Russell, and then the S&P. The laggards, I'm sure you heard, Bitcoin taking a whopping last night. And the Japanese yen FX, Euro FX, the 10 years, gold, and the bonds. So allocation is out of risk, out of safety into risk this morning slightly. We're trading inside of yesterday's range for the most part on the indices, and that's where we stand. Crude oil is almost unchanged at 63.71. Crude's been sideways for the last couple of days, and that's where we stand. So what's likely to drive us today? Looking at what's on the calendar, we're going to have a couple numbers here in 10 minutes, nothing too serious. NAHB Housing Market Index at 10 o'clock Eastern, 9 Central for January, expecting 72. We get the Bank of Canada rate decision also at 10 o'clock Eastern, expecting 1.25%. The previous is 1%, expecting a hike of 25 basis points. And at 4 o'clock this afternoon, we get another couple of low tier numbers. The total net tick flows in and out of the U.S. for November. That's at 4 o'clock Eastern. We get the beige book at 2 p.m. Eastern today. That could be a mover. And then Fed Speaker Evans at 3 and Fed Speaker Mester at 4:30. And that's really what we've got for today. Let's take a look at the allocation is to risk, meaning money's being put into more risky assets and coming out of safety assets like gold, treasuries, and so on. Here's what we expected yesterday. Yesterday, more of the same. Why do I keep clicking my tongue here? I have no idea. I'm sorry about that. Really a terrible night of sleep last night, so I'm taking it easy today. More of the same, expecting an island, a gap and run scenario up through 2805 and higher towards 2810. I was looking for about 12 points of range max. That's the primary idea. And some may ask, well, why didn't you predict why didn't you predict that it would sell off? There's a cardinal thing that you got to follow here, and that is, unless the market indicates otherwise, you expect more of the same. I expect more of the same. The market's got to sell off for me to start thinking from the sell side, which means at some point I'll take a loss, and that's just part of the cost of finding that information out. But as long as it's gapping and running, the probabilities for a continued gap and run drop over time, but I don't know what it'll happen. So if it fails, I simply respond to that. And so until then, my primary scenario is going to be a continuation of what we see happening back here. Okay, so that's the primary scenario. Just hold the gap, and with a very, very weak response, and then continue higher with an impulse up. The secondary idea was an immediate push up and then failure, finding sellers, failure back to the mid of the gap zone, which was expected at 27.95, which I outlined yesterday. So as soon as the market had an impulse down yesterday, I announced, if you're following on Twitter, I announced scenario 2, announced 27.95 and a quarter as the expected target, expected area of intermediate support. It ended up bouncing at 27.95 and a quarter. I'll go over that in a minute. And then consolidating for a bit. So it looked like scenario 2 was in play, and then once it failed through the gap mid, we went to scenario 3, which looks like this. So scenario 3 ended up being the one that worked out: a push higher, impulse down, get down into the 95 mid, consolidate, continue lower, bounce off of the prior all-time high, 27.89. Ping, ping, pong, pong down here at 93, and then fall through and continue down with an extended target down at the prior day's point of control at 83. What the market ended up doing is it went to 83, then it went to the LVN, bounced up, then it pushed and it tested the prior day's low, and the extension from the top to the high of the prior day and down to the low of the prior day gave us a mid for this session, a mid right at the prior day's high. Completely structured, but clearly difficult to predict. All right, so here it is. Actually, you can see it better on the Renko, except the Renko was so busy. Not only did it fill my chart sideways, this is normally the resolution I use, the bar width I use for this chart. You can see it's way, way off. We had a lot of activity yesterday, very unusual activity. And here we have it. We open up. We bounce off of 28.0350 for the opening swing high. The opening swing low is in. And then we push through the overnight high. We get to 28.0850. And then we pull back to mid. Looks good for scenario 1. It tries. It only gets 2.75 points, about 2.25 points from the mid. And it fails through with an impulse. This is a big sign. There's the 95. So you got the 95 quarter right there. That's the low. It says it right there, 27.95 and a quarter, and it bounces right back up to the IB. This impulse, this impulse here, even though it's on the sell side impulses have a tendency not to work out lately, but this impulse down gives us a pretty good chance at a major day time frame level, which is the IB in the open, or the mid for the session, or if you want the front run, it would be the mid of the impulse itself, which is a 28.01. Let me erase that. I don't like to clutter things even more. And it turned at 2850, but the IB and the open confluence in this area, coupled with the way the book was responding on the way up, gave probably what was the best opportunity for the day. I did take this, I did announce this long here from the mid. It ended up failing, and as I said, anything below 28.03 is a no-go on the long side, and so it extends down. So now we're looking for the mid to bounce up. We're looking for scenario 2 to hold with a higher low and then continue higher. And as soon as it holds the mid and starts to push through the mid of the gap right here, we're on to scenario 3. Scenario 3 looks for an initial test of 27.89 and then a secondary and extended target, which I expected to take all day, 27.84. Here's what actually happened. There's the bounce off of the prior day's high. That's the green line. Okay, those are auto drawn on my chart, and it's just not able to find any help. Local double bottom right there, local double bottom. So we're looking for it to break through. I circled the middle one, which isn't correct. And we're looking for a trip down to the VPOC right there. So that was done at 1 o'clock Central, 1 o'clock Chicago time. And it just continued. The hits kept coming for the longs, and it just continued and continued. And if you look at what it did relative to the prior day, I expected it to bounce right here, find some support right here, 27.81. It had a small bounce at 82, fell through, couldn't test the 81 from below. Next, so it's got no strength at all. Next would be the low of the day, and there it is. Takes out the low of the day, fills the next day's close, and then we get the big bounce for the day, and we close in this area. Okay. The characteristics we have for today is a very complete auction to the downside, very orderly and complete auction to the downside. We have a double distribution profile, which is beautiful. We're on top at 27.9275. This is most likely another buy the dip opportunity for the long time frame for the OTF, and we're on top. This area here, this low volume node that exists right here, 27.88, is very important for today's trade. So any responsive selling, I'm looking for the market to fight in this 27.88 area. If it fights and holds that area, then I'm looking for it to go to the next large distribution, which is the overnight high. The overnight high fell right on top of the high volume node of the upper distribution. Think of these as two separate auctions. This is one auction, and this is a second auction. The point of control of this one auction is up here. The point of control of the second auction is down here. So if it breaks through 27.88 and stays offered, then the target, according to the auction, is 27.7850. So if you get long and it blows through, then you know that you got to stay focused, and you have an opportunity to get short into 78.50 and beyond. I would not overstay the short in this product right now. So that's how things shaped up yesterday. Like I said, I believe it's a pretty orderly trade, even though it's a sell-off. We had a very wide range relative to the prior days. We had really good volume when we go through, and so where the heck is the volume? 1.57 million this morning. The overnight session here in the U.S. traded 234,000. That's about twice the norm. The market opened, pulled back, and it just continued higher. It traded sideways during the Asian session right here, and then Europe opens and it pushes higher immediately. We're challenging the high. We keep challenging the high. Triple distribution profile in the overnight. No consensus at all. There's a pretty good battle, a very active battle in the overnight session. That's good to know coming in. The point of control is on the upper end of the profile, so we're likely to take this overnight high out fairly quickly. There's a lot of energy tucked up in here in the 91 area. So I will be looking to buy any attempts lower. We do have a high volume node against that LVN from yesterday. So this area right here that I pointed out, 27.88, has a high volume node in it. I expect further support there, although you don't want to lean too much on the overnight levels, as they're created with sympathetic volume. Here's what we've done on the weekly, just the last part of the review here. A very nice Monday trade. We have not had, notice the purple If you're watching in high resolution, you'll notice that this whole range is purple. I think that's purple. We have not had a day with a high ranging purple for a long time. That's the Tuesday, and Tuesday traditionally, by the way, is the most volatile day of the week statistically. Something to say about statistics real quick. This market has almost aimed to destroy any low probability statistics. The probability of trend has been stretched. Range probabilities have been stretched. The gap close probability yesterday, which was around 18% or 19%, that we'd close a 10-point gap, that was completely destroyed. So the lower probability plays are not playing out, or the lower probability the low historic probability figures have been challenged a lot more than you would think is normal. Therefore, the historical stats with every day are changing slightly, reverting to the middle, so to speak. So this is what we've got. Now let's look at what we have today. Doing a lot of talking today. Real quick, let's see. A quick look at Bookmap here for a minute. Look at what the market has been doing all night. It's been destroying the offer. There's a large offer right there. Okay, this is the new S5 Bookmap. You can get it at s5bookmap.com. The yellow now, the scale, if you look at the scale up here, this is what's darkest, the dark yellow. I can change that to red to make it the darkest so we can see where the bleeding is. I don't like that too much, but the dark yellow, almost curry color, is high volume. The dark blue is low volume. The black is no bids, no offers in that area. And you can see that the market is just right here, massive collision around the 27.88, pushes through, pulls back to the collision zone. I posted an image of a collision retest continuation set up yesterday. It's probably worth it to go through my Twitter feed, twitter.com/FuturesTrader71 yesterday, and take a look at the posts that I made there. I put up a lot of charts. And so it pulls back and then continues, consolidates. We get offers coming in here, and it just, again, collision, offers coming in here, collision, collision, collision. So what does that say? Why am I showing you this? It says that the buyers are fairly well motivated this morning. Be careful getting short. We'll see what happens on the open, but that's what I expect. We're opening in range. There is really no value given yesterday's trading, even though my charting platform will put up value here. This gray area is the value area, but you gotta be smart. You gotta think for yourself. In a double distribution profile, there are two value areas really, and it just depends on which side we're on. So value is probably somewhere around there and there. So we are in value in a way in the upper distribution. Open auction, I expect a little bit of responsive. I expect an impulse up. I'm looking for the market to push through to right here to 27.99, consolidate, and then push through again and hold against the week's open. Expecting bullish action this morning. Not seeing any follow through in the overnight session. We would expect normally impulse, pullback to mid, continuation. We haven't seen that in a while. So that's what I have for hypo 1 or scenario 1. A small pullback, impulse, consolidate, impulse, and so on. What are my key areas? Key areas, 27.88 to get long. 27.88 to get long. 27.94, which is the high volume node of this upper distribution, to scale out, right? To make sure I have at least half my risk off at that point. My stop should be down here somewhere. If I have approximately 7 points into the trade, my stop should drop, and I have half the risk off, then automatically my stop should be dropping about 7 points lower. Look for the consolidation. You are not wrong unless we stretch the IB low. So hold on. My plan is to hold on for 27.99, scale there ahead of the century figure, and then look for it to consolidate into a pop into the close. So buy against, so dots are buys. Buy against 27.88. This is not a trade recommendation. This is just what I'm doing. I'm looking to sell. X's are sells. Sell the X ahead of 27.95. 27.98 or so. Yeah, 27.98. Let it consolidate. 27.99 on the way up ahead of the 2800 century figure. And then the rest we just let play. Okay, if you have multiples, that is. It's very hard to trade single lots. Secondary, open, push, unable to sustain, find sellers, and if we start to move towards and into the opening swing, look for it to slip through the 27.88, and now you're looking to target 27.78.5 as the key target below. Anything it's likely to consolidate. Anything below that is gravy. That is 2. This is likely to happen. This could happen at 95, could happen at 98, this selling. So then we move into Bookmap and we look for areas that are being well offered. See, the 95 is well offered already. Right here, that was one of the key figures I gave you. Not seeing anything, seeing a small bid at 88 that kind of came in and out, but 88 is the other area I expect to be defended. So look for the market responding in those levels. For something to lean against. The cloud notes do not work in version 7. The custom notes, they're working on that. It kind of forces me to look at the chart more, but that's okay. That's all I have for you for today. Good luck, and I'll catch you tomorrow. Take care.